So refinances are up 85% from a year ago. And that's indicative of the market because rates are coming down.
That's right.
Which is awesome. But before we get to that, there's some other mortgage news that is surfacing. And it's a topic that we've heard about before.
Actually, we have. It's funny that you were telling me about that before this. And I was like, man, they were talking about that. What was it? 10 years ago, maybe?
20 years ago. I mean, when I started this topic of 40-year mortgages, that's what we're talking about. Anyhow, right now, there are some people lobbying for 40-year mortgages.
Why do you think that is?
Well, their reasoning is that the 30-year mortgage was created after the Great Depression or during the time of the Great Depression. And at that point in time, the average lifespan was 60. So it allowed people to finance a home basically over their lifespan. So now people are living well into their 80s. And so that's one of the cases that they're making. Also, we all know everything is so much more expensive than it used to be.
Yeah.
And in a lot of markets, wages haven't kept up with the cost of housing. And so by spreading that mortgage payment out over more time, it will decrease the payment.
Which would help people qualify for
it
more.
would. It's a wonderful thing for those purposes. I hate the amount of more interest that people have to pay, though.
Mm-hmm.
It is so much interest. But if it allows you to get into a home at a payment that you can afford, then, what I always do with my clients is I show them how to pay a little bit extra when they can. And then that helps them pay their loan off quicker and pay way less interest over time. So, and there's just seasons in life, right, Jason?
Sure.
Sometimes you just got to get in. You just need to buy a house. You need to get in the market. So everything you can be in you're in and everything's appreciating with you, not around you.
Yeah. And generally speaking, it is better to own than rent. Renting has its seasons. Not always. I mean, there's certainly cases that owning is not better. But for most people, starting to have a home, and real estate is one of the largest causes of wealth generation in the world. The wealthiest corporations that, own land.
Mm-hmm.
So I think it's important to know that it's not for everybody, but it is a great way. So I don't think the 40-year note is necessarily a bad thing. Given where we are today, I think there's a lot of people that it would help move and allow them to get into a home that they own and can start building equity.
Yeah. Yeah. It could be just like anything. You need a lot of different tools. And sometimes you grab, the flathead screwdriver. Sometimes you grab the Phillips. There are times where this 40-year mortgage could really help you. And there's other times where you may not want anything to do with it.
That's right.
But it's just another tool in the toolbox. And I love that.
Well, and I think, for anybody that's watching this, one of the greatest things that you do for your clients is you give them options. You don't just say, this is the way. You say, you could do this, you could do this, you could do this. There's multiple ways to accomplish the goal of either home ownership or refinancing or different things. And you do such a great job really educating your clients on what that looks like and how it looks to benefit them in different time frames.
Thank you. Well, that's important to me. And that's I have the heart of a teacher, and that's how I would want things to be explained to me. And that has worked really well these last 2 decades. So, you should have options. You should get those options explained to you. And at the end of the day, it should be your choice as a consumer, which one of those lines up with your goals. 40-year mortgages. We'll see if it makes a big, comeback with a vengeance, if it's all over the map now. The cool thing is that the 30-year fixed rate is at the lowest point it has been at since April of 2023.
Yeah.
So it's been over a year since we've seen rates where they are. And the most common question people say is, Linda, what would my rate be? Where are rates right now? And that is a loaded question. That is a loaded question, because without knowing your credit score, the type of property you're purchasing, how much money you have to put down, I can't give you a real rate. It's not a one size fits all there either. Your credit score is one of the biggest factors in the rate. And then the type of property you're buying comes right after that. So, but what I can tell you is that if you have a rate in the mid to upper 6s or higher, then you should be reaching out and we should have a conversation. And now may be the time, or we may just need to keep our eye on rates and then set a reminder for me to reach out to you when they get to a certain point that makes sense for you. But definitely, if you're in the mid 6s and higher, you should be reaching out to me. We should be having a conversation.
Well, and one thing that I want to note in the volatility of the market right now, if you know what you need and you have somebody like Linda keeping an eye on it, there may be just one day the market hits that rate.
Well,
Yes,
that actually happened last week. I was shopping rates for a client, and I typically never shop rates on a Monday and a Friday because they kind of get you like, oh, I forgot to do that last week. I got to do it Monday first thing, or oh, I forgot I need to do it Friday before I go home. So like for my whole career, I've locked most of the interest rates on a Tuesday, Wednesday, Thursday. Last Friday, the rates were really good, and I locked a refinance. And every day this past week, I was like, "Oh, thank goodness! Oh, thank goodness!
Yeah.
Oh, thank goodness!" Because
and
that's
that can
true.
make a huge difference. So,
Yeah.
so being prepared. One of the things that people do is they tend to wait until like it's so pressing, and doing, whether you're buying a home or in this case refinancing, because lots of people have bought over the last couple of years, like this, you should consider this as part of like a financial plan.
Yeah.
Like the health of your financial plan and how you're navigating this. You may have a higher interest rate and be planning to sell your house in less than a year. It doesn't make sense to refinance, right? But if you have a higher interest rate and you could save $200 or $300 or $400 a month, even if you kept making the exact payment and putting that towards your principal, now you're going to pay your house off way faster. So there's multiple reasons. We haven't even talked about consumer debt. Consumer debt's at an all-time high right now.
Yeah, the average family has over $30,000 in consumer debt, and that means credit cards, basically, right? Like personal loans or credit cards, and that's anywhere from 18 to 30% interest rate right now. And so, what does it cost you each month? Just monthly minimum payments on that $30,000. Most people, that can be $600, $800 a month, and if we took a look at all of that debt, if you're able to pay it off, that is the very best thing, right? Just
Absolutely.
pay it off. But if you're not able to, and it is just squeezing you every month, you can take that, refinance it in with your home mortgage at a much lower percentage rate. And of course, the time frame to pay it back is stretched out a lot longer. But now you can take that $600, $800 a month in minimum payments, and you weren't even touching the principal, and probably add somewhere between $200 and $300 to your mortgage. So it's a real thing. Like that is a huge benefit if you're in that situation. And like Jason said, I'm not just crunching numbers for you. I'm not just a yes girl. Like you say, Linda, I want to do this, and I give you this, and then I give it to you, and then that's it. I want to understand where you are. I want to understand what your goals are. And then I want to give you as many options as make sense. And then we talk about it. Ultimately, you have you do have the final say, and I will do exactly what you asked me to do. But there are things that you may not know about that are just normal for me because I've been in this industry for so long. And so I want to give you things to think about. I want to have conversation with you and walk alongside you in this. This is not a transaction. This is a relationship. And I want to advise you on some options that you'll have. So yeah. So the consumer debt is a really big thing. And I do think interest rates are going to continue to come down at some pace, although there are a lot of industry experts that feel that the upcoming Fed decrease has already been priced into the mortgage rates a little bit. So when the Fed meets in the middle of September, we may not see just this ginormous drop in interest rates because the market's anticipating that. We'll see a reaction. I mean, there's no doubt. Mortgage rates aren't typically responsive to those Fed fund movements, but we sure have been the last couple of years.
Absolutely.
They've all of a sudden become best friends. But anyhow, like at the end of the day, like you said, Jason, you might be able to get a killer new interest rate, but if you're moving in a short period of time, then it may not make sense, right? And so not everybody will tell you that, but when it comes to refinancing, you need to know what all your options are, but you also need to know how long it'll take to pay yourself back, because there are some lender fees that you incur again. And so you have to take the amount you're saving and compare that to what it's costing. And then we put that in a time frame. And so basically I'll say, in 20 months, you've paid yourself back, and then you're truly saving a couple $100 a month.
Right.
So anyhow,
or 5 or 6 or 700. I mean,
it's pretty cool. It's pretty cool. And I just want to encourage you to really pay attention and reach out to me. If there's somebody else in your life who's helped you that you've been happy with, reach out to them. But pay attention to this topic right now, because if you're in a high 6, 7, 8% interest rate or higher, you're going to have the opportunity, I believe, to really get that debt locked in at a lower rate. And that is phenomenal. Those of you out there watching this that have a 3 and a 4% interest rate, you've probably already told us that in the comments. And congratulations. Like that is amazing. And if you're still in that home, that is amazing too. I actually had somebody earlier in the year who wants to sell his house and downsize, but because he has such a low interest rate on that mortgage, it doesn't make sense. He would literally sell this big house and buy something and have a much smaller mortgage, but because interest rates are almost double than what, he had before. Yeah. So he would have a smaller home with a bigger payment, a smaller home that costs less with a bigger payment, right? Because interest rates. And so please, please, please pay attention as the market is shifting, not only for your home with refinancing, but car loans and things of that nature. So this is a great time for all of us to get financially in better shape.
That's right.
Yeah. So if you have any questions or want to have a conversation, please reach out. You can message us where you're watching this video. You can go to our website, partnerwithjasonandlinda.com. Just reach out. Let us know how we can help you and serve you. And especially from a refinance standpoint, pay attention.
Everybody have a great day.